Okay, a good afternoon, evening, and morning, everyone. From wherever you're joining, my name is Leonard, and I'll be conducting today's webcast for you. First and foremost, thank you for being part of our very first Bitstamp talks. This is our global series of thought leadership events that brings together institutions and professionals like yourselves through webinars and physical events. The theme for today's session is DeFi expectations, and we have a stellar lineup of speakers with you in the virtual room. The insights that we're sharing today are aimed to help you separate the hype from reality, to think about how you can overcome some of the barriers of adoption, and to define your expectations for what the DeFi and digital assets ecosystem can mean for your business. We're going to move through quickly today to keep this webcast to 1 hour, and to save time, you can see the agenda on the left of the screen. Quickly, some housekeeping. If you're facing technical issues during the session, first try and refresh your browser. If that doesn't work, try logging out and rejoining the session. This session will be recorded live to share with others that couldn't join today. And because of this, all of your mics are off by default. There will be a Q&A session at the end, so please start dropping your questions into the Q&A panel anytime from now. It is an interactive session with live polling after each presenter's talk. Do participate when you see the voting panel appear. And very lastly, I ask for your help to complete the online feedback form as it pops up when we end the session. Okay, so to start our official program today, let me first introduce our speaker, which I know pretty well. Andrew Leelarthaepin is our Managing Director of Bitstamp Asia Pacific, and he'll be delivering a welcome note after this short video.
Thank you, Leonard, and a warm welcome to everyone joining us today. I'm very excited to introduce you to Bitstamp Talks, and especially since the first iteration of this event series kicks off right here in Asia. There's plenty going on in the crypto and digital space here in Singapore, and with many things crypto, Asia has been at the forefront of innovation and change. In addition, I would like to recognize the full spectrum of institutions that have joined us today. We have representatives from local and regional banks, global investment banks, asset managers, hedge funds, payment providers, securities brokers, payment companies, together with a full set of crypto native firms. This is super. If this doesn't speak to how much institutional interest there is in the crypto asset space, I don't know what does. Bringing communities together and being an industry advocate as digital assets go mainstream and institutionalizes is part of what we do as the longest running cryptocurrency exchange. We recognize that the ecosystem is incredibly diverse and complex. Therefore, we've brought together our partners and network for you, so you can hear from the industry experts on what you need to know in 2022. So a big warm welcome to all our speakers. Thank you again to Henri, Tucker, and Simon for joining us today. The past few years have seen an acceleration in the development of infrastructure catered to the institutional client. The ecosystem is developing at a rapid pace, and we are now seeing institutional grade solutions in exchanges, custodians like Copper, OTC liquidity, lending, prime brokerage, and retail platforms. These solutions are being designed to meet the needs of the participants in the traditional financial system, by having a thorough understanding of the institutional workflow. We see this trend continuing in 2022 and thus bridging the gap between the digital asset ecosystem and the traditional financial system furthermore. We also expect to see growing crypto engagement by banks in 2022. 2021 saw a decent number of banks in the region make plans to offer trading and custodial services for cryptocurrencies. DBS in Singapore, Commonwealth Bank in Australia, SAB in Thailand acquiring 51% of BitCup, and just this January, Union Bank of Philippines reportedly planned to offer crypto services to its customers. We believe more banks in Asia Pacific will look to establish a foothold in crypto in 2022. This will create another conduit for more institutional investors to get access to crypto. At Bitstamp, we are well positioned to serve the needs of this segment by providing you and your clients a customized solution without the high overheads needed to begin. Finally, regulation is key to a wide adoption of digital assets. The overall regulatory landscape has evolved dramatically over the last few years. Singapore has emerged as a crypto hub, with the regulatory environment of Singapore making it an attractive place for entrepreneurs in cryptocurrency. Similarly, Australia will create a licensing framework, with the government sending a clear signal that they intend to regulate the digital asset market. Also, Hong Kong plans to have a regulatory regime ready by July of this year. This push for solid regulations around the space will support the trend of greater participation amongst institutions as they look to the regulatory environment for certainty to participate. As a top regulated global exchange, Bitstamp's expertise and services are focused on what we do best, which is providing institutional grade, compliant, fast, and secure access to global crypto liquidity. We can reach out to us if you need a deep dive into the best way to access global crypto markets, or get connected to any of the speakers from today. Now I'll hand things back to Leonard to introduce the first of our speakers.
Thank you, Andrew, for that opening note. Our next speaker for today is Henri Arslanian from PricewaterhouseCoopers, and he'll be setting the backdrop for us today. Henri's going to cover key trends that will continue to provide strong tailwinds for both retail and institutional adoption. Henri, take us away.
Excellent. Well, thank you very much. I really appreciate this, Leonard. Thank you for the big introduction and opening remarks from Andrew as well. We're going to talk about a lot of topics that was just discussed right now on the entry of institutional players and some of these big players. My goal over the next couple of minutes is very, very simple. I want to share with you all some of the market opportunities and big trends to watch in 2022, and hopefully empower you with this information and then let you make your own decision on what the impact could be on your business, on your plans, on your strategy. But before I start, always give a little warning here. Be careful. Anybody tells you they're an expert in crypto, knows exactly what's going to happen over the coming months, run away. I can tell you I spent 24/7 of my time in this space and have absolutely no idea what's going to happen even 1 month from now. Case in point, only with some of the developments we've seen this week, in the last 72 hours, already have been groundbreaking from that perspective. And this is why today I'm going to focus on 6 trends. That's it. Nothing more, nothing less, and give you some of the latest developments on this topic. And hopefully this could be useful from that perspective. Hope you guys ready. Let's rock and roll. The first one is the entry of institutional players. Andrew just mentioned it in his opening remarks and the role that Bitstamp is playing in this regard. But really, we are seeing a continuous entry of institutional players enter the market. They're not the reasons why they're doing so are actually very obvious. Not only there's new revenue opportunity and there's demand from existing clients, but also some of the points that was mentioned that are very, very important. Regulatory clarity. Today, according to Cambridge University, only 5% of regulators do not have somebody working on crypto. So there's a lot of clarity from that perspective. Increased retail activity. A year ago, we had less than 100 million people with an account at a crypto exchange, and now we're over 250 million already. ESG questions. For a long time, we had this debate whether Bitcoin was environmental friendly. With the China mining ban, with some of the move away from Kazakhstan, China has went from 65% to zero of global mining, pretty much, and other places like the US, where there's a lot of renewable energy, have taken the lead from that perspective. So all these elements together is really driving more attention on the entry of institutional players and acting as catalysts. Second big development to watch is the rise of stablecoins. First of all, what is a stablecoin? Stablecoin is digital currency that is backed one-to-one by fiat money. And that actually brings a lot of benefits, not only for traders, but also for the broader ecosystem. I mean, to put things in perspective, on January 1, 2020, there was less than $5 billion in stablecoins. And now we're over $150 billion already. But you'll say, Henry, but what are the benefits? Why are we having digital currencies pegged to fiat money? The reason is actually quite simple. There's not only it provides the ability to transfer money around the world 24/7, no cross-border fees, and this is not only good for traders because over 60% of trading pairs are with stable coins like USDT and others, but also it solves a very big problem. For example, one of them that Libra or DM was trying to tackle. And many may say, okay, now that the Libra has failed or DM has failed, does that really change anything? Actually, really what these guys were trying was really to make sending money around the world as easy and cheap as sending a WhatsApp message, for example. And this is why we're seeing, for example, in the world of international remittances, a big area of development where today, the average fee of sending money around the world is 7%. And guess what? If you're trying to wire money on a Sunday, good luck. Because obviously a lot of these banks do not operate over the weekend. And this is why there's a lot of opportunities and a lot of actually momentum with the rise of stablecoins. Number 3 is the field of DeFi, decentralized finance. What is DeFi? DeFi is the delivery of financial services without any traditional centralized intermediary by leveraging blockchain technology. But you may say, come on, what are the different offerings that are available in the world of DeFi? Actually, quite a few, from DeFi exchanges, borrowing and lending, to stablecoins, to even decentralized asset management, and even insurance, for example, all being offered in a decentralized format. In these cases, there's no counterparty risk, but actually the only pretty much risk you're facing is smart contract risk with a problem in the code, for example. Again, to put things in perspective, on January 1, 2020, there was less than $1 billion in total value locked, which is how we measure the DeFi activity. And now we are over 200 billion already. And why this is important, because it's not only it's open to everyone, it's permissionless, but it really allows us something we call the composability, often referred to as financial Legos, which is because of the open nature format of DeFi, allows us to literally mix and match any kind of product or feature that we want from the world of DeFi. And also, this is why a lot of the applications we're seeing in the centralized world, for example, great exchanges like Bitstamp, we are now seeing the equivalence happen, again, with decentralized assets, but in a decentralized world as well. Yes, today we're still at the early days. For example, volumes on decentralized exchanges are less than 10% of what we see on centralized exchanges. But again, a very interesting developments to watch what's happening on that perspective. Not only because it allows us to have a first principle approach to financial services, but it also allows us to experiment with great concepts like decentralized governance. For example, in the area of DAOs, decentralized autonomous organizations, where how we can have and really rethink on a first principle basis how we're able actually to run organizations from that perspective. Number 4, NFTs, non-fungible tokens. Obviously, big topic of conversation these days. And NFTs, what are NFTs? They're digital tokens that are blockchain native, unique, and non-fungible. And this is something that Simon will talk about later on when he talks about the gaming world. But really, we're seeing that the world of NFTs continue to pick up. Despite some of the market volatility we saw in recent months, actually the world of NFTs really continued to grow very, very, very rapidly. And this provides a lot of opportunities. Not only elements like traceability and tradability, but even things like interoperability, for example. You know, in the good old traditional centralized systems, for example, if I want to buy a piece of art, I have to go people will go buy it from a Christie's, a Sotheby's. Why? Because they want to solve or reduce the risk of issues like provenance, authenticity, for example. The beauty with NFTs, I know exactly who own a certain NFT, what price they bought it from, and that can really, really get rid of all the disintermediation or some of the rent seeking that takes place in some of these platforms. So very interesting, and especially what's been happening. The Super Bowl took place last Sunday. For the NFL, every attendee at the Super Bowl had actually an NFT with his ticket. Even today, we saw other large exchanges and others try to enter the space, and that's very, very exciting from that perspective. Number 5 is the world of CBDCs, central bank digital currencies. This is another topic that is gathering a lot of attention and definitely an area to watch in 2022. But first, what is a CBDC? A CBDC is really kind of a digital form of money that is issued by the central bank and becomes part of the monetary base of that economy. And this actually is pretty game-changing in many regards. For example, for policymakers, allows them to have visibility on the impact of a certain policy, for example. If you're looking for a way to combat money tax evasion, money laundering, CBDCs are great. Again, today, the most private and probably anonymous way of payment are good old banknotes, cash, for example, or the traditional banking system. And this is the beauty with CBDC. Pretty much everything becomes very traceable from that perspective. And also allows us other new concepts that are not possible with traditional money, like programmability of money, for example, where I can embed interest rates, where I actually make money that expires if, for example, it is not used by a certain date. So a lot of exciting elements going on there. Why this matters is because we're seeing central banks increasingly enter the space. Today, over 86% of central banks are active in the space, and not only on the wholesale element, but also on the retail side as well. This topic, as Andrew mentioned, we're in Asia. This is very important because Hong Kong and Singapore today have probably some of the most advanced wholesale CBDC experiments going on around the world. And retail CBDC, you have to look at China, where already now the new CBDC, the ESCNY, is coming in full force already. And this is why it's very, very important to see, especially with the Olympics going on right now, really the role that China is going to play in this space of moving forward. And finally, the last topic I'm going to leave you out with is really what's happening in the field of Web 3.0 and the metaverse. A really, really exciting developments. First of all, what is Web 3.0? Web 3, we started with the internet that was Web 1.0, very static, the good old America Online and Netscape that we all know. We moved to today where we are with the Web 2.0, which is a centralized platforms that we all know. And we're moving to Web 3.0 ecosystem where, as a user, I own my data, I can control my data, and I'm able to interact with others in these decentralized communities. And one area where this is becoming very interesting, and I'm sure Simon will touch about it today, is the metaverse ecosystems. Metaverse ecosystems are 3D immersive environments where users can interact with each other using avatars, for example. And this is obviously becoming a big deal, especially after Facebook changed its name to Meta. But it's important to understand that these metaverse communities have been around for some time. For example, some of them, like Second Life that you see here, has a GDP equivalent of $650 million a year, more than many other countries. What you're seeing now, these ecosystems like Decentraland or Sandbox and others who are really coming in, growing in the space, and is giving rise not only to new economies, but even new ways of monetization. For example, from virtual real estate management or designing virtual ecosystems. So I'll leave it here. Maybe Paichin, if we can bring in my poll as well right now. And really, I want to ask you as we leave today, I mentioned all these big developments we discussed. Which one is the one that you think will be the one that will see the most activity and interest in 2022? I leave you guys to answer the polling question. And I really leave you guys with, again, the warning. There's a lot of developments going on in the world of crypto. Again, just be careful of the expert topic on that perspective. And again, for anybody interested, please, I'm happy to keep in touch. I have a lot of educational videos on the topic on many languages, Twitter, newsletters every week on LinkedIn. And it was a pleasure and honor to share with you all today. And as the poll questions are being answered, I'll pass it back to you, Leonard, seeing that the NFT world and the Web 3.0 are leading in the race of the topic to watch in 2022. Back to you, Leonard.
Great. Thank you, Henry. Super insightful. I think hang on to those US dollars. They may become collector's items one day. Basically, we've got a lot to be excited about in the next great decade for our industry. Now, valuations have been really good to digital asset custodians in recent months, and rightly so. right? This is the critical piece of the infrastructure and security setup for all market participants. And on that note, let me welcome Taka Shibayama from digital asset custody providers Copper to provide us with some sound bites from his clients on the ground. Over to you, Taka.
Thank you so much. Let me share my screen. Okay, so as Copper is a crypto or digital asset custodian, we come across a lot of companies that are institutional investors that are coming into this space. And I'm talking about not just the crypto native hedge funds that existed prior. These are traditional hedge funds that have been investing in equities, bonds, with various strategies, are looking to come into the crypto space because they see the lucrative opportunity. And with these traditional hedge funds and asset managers, there are key issues that they need to solve in order for them to come into the world, the crypto world. And that's not just about the trading records that they have. Now, if you're in the traditional world, you have custodian banks holding the securities for the clients. So they don't have to move assets all across different exchanges. I don't need to move my funds to NASDAQ to trade Apple shares, right? We have prime brokers and many ways that you can actually trade shares on exchanges without having to post your actual principal onto those exchanges. Now, this in the crypto world, that's very different. We always have to move our funds from our, let's say, Ledger Nano or some kind of wallet that you have to trade on exchanges. Now, time and time again, we do see a lot of these clients come to us and say, look, we're not that comfortable leaving funds on exchanges. We've seen many cases where exchanges get hacked, owners running away with the money, all these issues that they've seen, and God forbid it ever happens to Bitstamp. But these are one of the concerns that they address to us. The second thing that they address to us is that they want to have the experience to trade securities just like crypto. So which means that they want to be able to just log into the exchange and trade right away, which means that they don't have time to move their funds to an exchange and wait for network validations. And also on top of that, pay for gas fees. It's very capital inefficient for traditional hedge funds and asset managers to do this. And then third, they not only want to just trade on exchanges, they have other requests. They want to stake their assets. They want to do OTC. They want to do DeFi. All these things are coming in as an option for institutional investors to trade in this crypto world. What kind of solutions do you have? These are the questions that we always get from our clients. And at Copper, we try to mitigate those types of risks and solve this issue of providing all these financial services to our clients. So we have created this solution called ClearLoop, which allows for clients to keep funds with Copper and have the experience or the user experience basically to allocate a virtual balance on the exchange and trade there. And once you go onto the exchange, you'll see that virtual balance on the exchange, and it will enable you to trade on that exchange just as if you actually had assets on that exchange. This solution enables for the client to remove the counterparty risk from the exchanges and also increase capital efficiency because they're not using the blockchain to move the funds onto the exchange. The other thing that we also provide as a custodian is we provide not just cold, warm, and hot wallet solutions like a plain vanilla custody. We provide, as I mentioned, the exchange networks. We also have built on top of our platform for clients to access DeFi solutions through their custodial wallets. They can stake their assets using their custodial wallets onto staking platforms nodes in order to earn rewards and participate in their governance. And lastly, we also enabled a internal trading system so that clients can access OTC trades, whether it be spot or derivatives, through our platform. So these are the things that Copper has thought about, and with careful planning and discussions with our clients have enabled in our platform. So with that in mind, let's see the polls. Yeah, so this is an interesting question. So what about the private keys? So private keys are generally a password to the access of your crypto funds. The access to that crypto funds allows either the custodian or the client to hold their assets entirely. Now, I see right now in the polls that their clients are saying that you should hold on to it. The client should hold on to it. As an institutional custodian, we believe that the entirety of the private keys should not sit with one entity. We have the technology has evolved in such that we can actually split the private key into multiple pieces and have the custodian, the client, and the trusted third party, all three hold a piece of the private key so that external hackers, internal hackers won't be able to access the entire private key, so that we can mitigate the single point of failure issue. Now, whoever's interested in talking about these issues, please reach out to me. Thank you very much for your audience.
Great. Thank you, Taka. Thank you for sharing with us. There's certainly a lot to consider when getting custody right, especially with the number of options that the ecosystem now provides. Now, to introduce our next speaker, the gaming and esports industry is running white hot right now. We're really lucky to be joined by Simon Cowell from Bitcoin gaming infrastructure providers Zebedee, and he's going to enlighten us on the virtual economy in the context of gaming. Simon, whenever you're good to go.
So my name's Simon. I'm the CEO of Zebedee, and I'm going to talk to you. I know we've touched on this in previous presentations, but I'm going to dwell on the importance of the largest global community that is currently underserved by traditional finance, and that is gamers. So gamers are, it's a 3.2 billion people around the world play games in various ways, and a lot of them do it together. This is the single largest global community, all united by playing and experiencing with each other. But the other important thing to note is that games are no longer just games. They've really evolved. Gaming has now become increasingly how the next generation really experience the world, how they socialize, how they consume content. And that and those interactions and importance of gaming as a media for doing everything else is just growing and becoming much bigger. At the same time, there is a limitation to what is happening, a limitation to the potential of the gaming ecosystem and this gaming economy. The gaming industry is already the largest media industry. It's $180 billion a year and growing very rapidly. But most of these revenues are generated from in-app purchases, ad revenues, subscription. What isn't happening is actual economic activity. The games are a closed system of in-game currency within particular walled gardens that aren't linking all this activity that's happening on a global basis. And because of that, those in-game currencies, you can't generate real economic activity. You can't have that spontaneity, that innovation. And this is because money just doesn't work within that gaming ecosystem. So there is a huge amount of economic activity that really just isn't happening because there's no payment solutions or value transfer solutions for that existing gaming economy. What is needed is a global currency that works for that gaming setting, which is increasingly micropayments, cross-border, programmable, and traditional payments just really do not serve that. The other point to consider is that gaming is very different to the traditional economy that we're used to. This is pure software. There is theoretically no physical limits to what can be created within this economy in the same way that there is in the real world. It's my belief that within my lifetime, because of these factors, what is being called the metaverse could theoretically become bigger than the real economy within the next 50 years. And that's really what we are trying to solve at Zebedee and provide those solutions. What is missing is the value transfer that is really fit for the gaming ecosystem. So at Zebedee, we've created a Stripe-like payment service provider that purely uses crypto as the rail so that you can have that interoperability between the different ecosystems that are already there, but that gamers are unable to, and publishers themselves are unable to create that economic activity, create businesses within games, earn within the games, pay each other on a global basis in a global programmable micro payments currency. So that is what we've done at Zebedee, build the tools and the infrastructure that's really designed for the gaming industry first, with the belief that this really is the largest future market for payments in the world, compared to what is currently happening with traditional payment service providers. So that is fundamentally what we're about. And just to, I don't want to be accused of exaggerating the potential of where the gaming ecosystem is going, but you can really see this in the fact that, the kids today, even compared to 10 years ago, this is where it's now very common for you to socialize with your friends and conduct, other features of your activities within this environment. It's not just in games. You've got Discord and Twitch, where you have all the activity that happens in and around what's going on in gaming. So with that, I will finish with a poll just to highlight this. If you have that to hand, Leonard, really, if you have kids, how many, do your kids outside of school increasingly spend their time socializing in gaming? And if you don't have your own kids, do you observe any others? And I think the poll is coming in overwhelmingly as yes, it is. That's where your kids increasingly spend their time socializing. So here's to the future of the gaming industry and the metaverse. And I think it's our job to be able to make that actually become a real economy in the same way that the real world is. Thank you, Leonard.
Thank you, Simon, for sharing very interesting results in the poll. It's really, I guess, a proxy for the current dynamics, right, in terms of gaming, how people interacting virtual worlds versus the physical world. We're seeing such a strong and organic intersect between gaming and crypto audiences. Some of you may have seen that we at Bitstamp signed multi-year sponsorship deals with esports teams just this quarter. And that's really about complementing our wider participation in the gaming ecosystem. So it's a space that I would say collectively, we're all very interested in. So now I'm actually going to welcome Andrew back to the mic, just to bring some of these thoughts together from today's discussion.
Thank you, Leonard. Thank you again. Yeah, so 3 very, very interesting broad topics there. And I'd say there's a lot of various takeaways from that. But I guess, ultimately we link it all together by focusing on a few things. So I guess one of the things that I thought was interesting from Henri was that if only 5% of regulators are not looking at crypto now, then if we flip that, then 95% of regulators are focusing on crypto, right? So that obviously means that there's definitely eyes on the space. And then in terms of solutions being designed to meet the needs of the participants in the traditional financial system, Tucker and the guys at Copper, they're building out the solutions by having a thorough understanding of the institutional workflow. It was quite interesting to sort of like see the numbers on the poll. It would be good to see that in its final step or final sort of number. Interesting to see that a lot of people thought that holding private keys should be the domain of the customer. I think the private keys held by the 3 parties like Taka suggested at Topper, that does, help to mitigate a lot of the risk in terms of point of failures. And then I guess finally, it's good to know I didn't know that the single largest global community was the gaming community. So thank you, Simon, for for highlighting that. At some point in time, to see that virtual economic value being transferred into the real world, that's super exciting. And I think that sort of ties it all in. Particularly as gaming becomes a bigger and bigger part of this world. So I guess to sort of wrap it all up, it's clearly evident that we're still at the start of institutional adoption, and we expect that this growth is going to continue at a rapid pace. To recap, at Bitstamp, bringing communities together and being an industry advocate as these assets go mainstream and institutionalizes is part of what we do. So no matter if you're a broker, bank, neobank, fintech, hedge fund, props trader, or family office, Bitstamp enables crypto access to a wide range of institutions. It's been a pleasure to host you today, and I hope you have gathered some useful insights. Thank you so much for our three speakers. We'll now have some time for Q&A, so I'll hand it back again to Leonard to run that.
Okay, great. Thank you everyone for putting through your questions. I think we have enough time to answer 2 or 3 of them. Now, as a big disclaimer originally that Henri put to us was that we don't know all the answers. We can certainly debate and talk to them. But let me pick one out actually, and oh, there's another one coming through. This one I'm going to direct at Simon. I think it sits right in his ballpark. Actually, it's 3 questions in one, but I'll just summarize it. So for Simon is, how big might the metaverse become, and is it a frenzy? Is it something, a fad, or is it here to stay?
So I think that, yeah, I did make a comment around this, and I think it's very difficult to predict how big the metaverse will become, because it is very different to how the physical world and the physical economy works, because it is a much bigger global community. And because it is pure software, there aren't the same physical limits. So my sort of proxy rule of thumb is to imagine that, by the end of my lifetime, which I hope is another 50 years, that it could be at least as big as what we call the real economy. And it's certainly not a fad. There's certain things within it that are fads, but the metaverse isn't one global world that everyone joins. The metaverse is, the ability to join up all these different pockets of worlds that are happening, whether it be an individual game that are linked between, the social gaming, social media platforms like Discord and the content creation and streaming that is happening on Twitch. Particular games will be fads because it is, consumer content, but don't confuse a particular fad or a particular coin or a particular game or NFT as the whole of the metaverse. That each one of those is just one small part of what makes up what is now called the metaverse.
Okay, I saw Henri. I think you can chime in as well.
Sure, of course. No, absolutely. The big question is this a fad, right? But let me give you some data points, I think, just to put things in perspective, right? So we mentioned gaming community, right? Today, according to some data that we have, there's over 60 million messages that are sent daily on Roblox, which is one of the platforms we have of these metaverse communities that many of your kids are probably playing on it. But also just to put some things in other perspective, today, on an average year, there's over $54 billion that are spent on buying the virtual goods, which are in-game assets or other type of assets. So this is not like a lot of side, comma or something that we're seeing. There's actually pretty serious numbers being on there. The estimates that are made today, they say that the metaverse could be $1 trillion opportunity. This is actually data according to JP Morgan. But I think what's really important is actually these are really giving a life to real economic activity. I mentioned before that in Second Life, which is not as, I would say, cutting edge as always seeing with Decentraland or Sandbox, there is today a GDP equivalent of $650 million a year that is being developed. And very importantly, 80 million of that is being paid to creators. So again, if you put this in a metaverse ecosystem where we're able to interact with each other, layered with a Web3 ecosystem that I own my data, that I'm able to interact with it, and really this combination of the metaverse, combination with decentralized assets, with digital currencies, and with all these ecosystems that are being created, that is really giving us to a new opportunity. Is it going to happen in 6 months, in 1 year? Probably not. But this is actually a systemic shift that is here. I guarantee you today, every Fortune 500 company this year at their strategy meetings, they will need to have a metaverse strategy. Why? Because they need to be there in the same way that in the 1990s, every company had to come up with their online or e-commerce strategy. Back to you, Leonard.
Great. And thank you, Simon and Henry. Hopefully those Fortune 500 companies meet in the metaverse to talk about the metaverse. So yeah, look, we've got another question. I'll direct this to the panel, maybe askew to Henry and Andrew. What is the implication of lower volatility in crypto markets compared to US equity markets?
No, absolutely. When you look at volatility, crypto, make no mistake, is a very volatile asset. And obviously, we saw the last couple of weeks with how even only the price of Bitcoin and other digital assets is a very good example. Now, that obviously gives rise to a lot of opportunity for all our hedge funds listening today. Obviously, that volatility with the liquidity is a perfect environment for any kind of trading activity. But however, I think one thing we should acknowledge is on the longer term, really when it comes to volatility on crypto will go down as there's more liquidity, as there's more institutional players coming in the market, and frankly, as the universe of users expands as well. So I think that's one thing to see. One thing that I'm watching when it comes to volatility is actually the number of financial instruments that are available now is significantly, not only there's more liquidity and deeper, but also more advanced than what we had a couple of years ago. For example, some of the derivative instruments we're seeing and some of the hedging products that are coming in the market as well really give rise to a lot of opportunities from that perspective. So yeah, so volatility is not ideal for potential people that are holding it. For traders, it gives a lot of opportunities. But let's not forget that crypto is not only about speculation, right? Yes, a lot of people are buying it just to see price increase, but really there's a lot of these use cases that many of them we discussed today that are taking place, which are kind of bigger than some of the price of Bitcoin or crypto assets on a daily basis.
Any comments from Andrew? I saw you were about to jump in.
I think, am I on?
Yep.
Okay. Yeah. I mean, yeah, sure. Volatility is definitely higher in crypto asset markets. And I think what I'm saying is essentially what Henry touched on. The reason why many professional traders enter the crypto markets is because of the volatility. So whilst it may be a barrier for many, it's a magnet for others. But with that, professional traders bring with them the liquidity, reduces spreads, and further pushes down that market maturation forward, right? So at some point in time, the volatility will settle down.
This is the next question. I'm going to put this actually out to the whole panel. And, the question is, some countries which were against digital/cryptocurrencies, such as China and Russia, are taking a step back, while others are using them as legal tender, as we've seen in some South American countries, right? Jurisdictions. Do you think that a worldwide adoption of cryptocurrencies will arrive sooner than we thought? And I might kick off with Tucker, if you're able to chime in, and then we'll just go around to the other speakers.
Yeah, sure. I mean, I don't have a personal hard opinion on this, but I know that a lot of countries are experimenting on this. And from a technical standpoint, I do believe that this has greater usability than your your traditional fiat currencies. Just think about even on the trading side of things. If you can settle using digital currencies, you don't have to go stay on this T+1 settlements with trading like the securities market. You can do it instantly on the blockchain. So thinking about other things like Henry mentioned, remittances. If we can remit money using digital currencies, they can be instant rather than waiting over the weekend or hours to receive this money. So there's a lot of benefits to this. But at the same time, as a person coming from both the traditional side and the crypto side, there are kind of pros and cons to that. One thing that kind of really scares me quite a lot is can the governments really control your money, whether it be in your wallets, your digital wallets? Can they siphon that money out if they deem you, or they want to penalize you, etc.? I mean, I can think of many different dystopian ways that this thing can go wrong. So to just go back to where the question was, yes, I do think that a lot of countries are going to start rolling this out, but I can't give you my personal opinion on when that will come.
Happy to share if you want as well on this one. I think to answer this question properly, we need to look at the type of asset as well, right? So I think we need to separate cryptocurrencies, stable coins, and CBDCs. When you look at cryptocurrencies, obviously in certain countries like the US, the Western world, the crypto assets are here to stay. I think that's we crossed that bridge a long time ago. However, in other places like China, for example, I think it's very unlikely until the time we have capital controls. I have trouble seeing how Bitcoin will be made legal. There's no point in having capital controls if you can buy Bitcoin freely and get the crypto Bitcoin out from that perspective. I think that's one thing to understand from that perspective. Second is when it comes to stable coins and CBDCs, it's going to be very interesting as well. The good example on this is the comparison between China and Europe. In China, for example, we're moving ahead with the ECNY, with a retail CBDC. As Taka mentioned, yes, there's a lot of benefits, like reduces corruption, but the one downside is really you give away all your privacy. Maybe there's reasons I want to use cash. I don't want my wife to know that I'm buying certain things. I don't want others to know what I'm doing with my money. With a CBDC, that is impossible. It's out there. A good example is the ECB, the European Central Bank, did a survey recently, and they found that the majority of Europeans, particularly Germans, by the way, rather have less convenience if it means they're going to lose on the privacy. So I think conceptually a CBDC, as much as we like it, may not work as easily in Europe or parts of the US as well. One thing I'm watching right now is what's happening with stablecoins. We have a lot of countries that are doing developments. Palau, for example, a small country not far from Taiwan, Japan, is actually looking at issuing a government-backed stablecoin, for example. Other countries are looking at how they can put that into place as well. And then, of course, countries like El Salvador. Obviously, El Salvador was the first one. We'll see what happens. There's a lot of activity there. I'm watching other dollarized economies or de facto dollarized economies. There's quite a few of them around the world. And actually, how are these countries going to react, and if others will follow suit? One thing to watch there is the reaction of the IMF and the World Bank. Not surprisingly, these two organizations were created during Bretton Woods, during the big meeting at the end of Second World War, 1944, where we decided to make the US, the dollar, the reserve currency of the world. There's a lot of pushback from both these organizations against El Salvador and against others who are looking at doing this, like the Marshall Islands is a good example. And I think that's one thing to watch. The geopolitical elements here will be very, very, very important to watch over the next couple of months and years. Back to you, Leonard.
I'm going to pass to either Andrew or Simon to chime in on this. Quite a broad answer question.
Yeah, I can chip in. So I think that the adoption of crypto at the national level is really going to be driven by adoption at the level of the people. And we're seeing this as a bottoms up movement rather than a top down thing. And I always remember there's a quote that whatever technology you grew up with and existed when you became an adult is normal to you, but whatever exists, whatever new technology emerges after you become an adult is unnatural and unholy. And we're at that point with crypto. It's been around for 10 years, so it's starting to become more normal, but certainly within the next 10 years you'll have more senior decision makers in countries for whom they grow up with crypto as being normal. So I think over the next 10 years, we're going to see this volatility of some countries being a bit more forward thinking and others dragging their heels, until we get to a point where actually it's normalized within the population as something that they grow up with, and it's not controversial to adopt at a national level.
I think Andrew's going to chime in as well.
Sure, I'll chime in. I actually liked what Simon just said about adoption, especially when you're what you've grown up with becomes natural. I mean, the only thing that I see is that traditional sort of establishments and governments operate at a much slower pace vis-a-vis the digital asset industry. There's a lot of adoption and fast moving pace in our broader crypto ecosystem, and that just can't be matched by regulations. And there's always going to be a level of like catch up on their side. So, whilst from ground up, like there could be a lot of adoption, I'm not sure how quickly the institutions, in terms of those that govern, will adopt this. And it depends. Like Henri did make a good point on different types of assets, crypto versus stable coins versus CBDCs, all very different use cases.
Okay, yeah, look, a great, well-rounded answer from all the panelists. I love the point that Simon made, that it's got to more than likely bottom up. I wish that all governments were for the people and serving to their needs. That's a bit of my cynicism for you today. We're at the end of the hour. We weren't able to cover 2 or 3 more questions, but thank you everyone for putting those through. Look, as we end this session, I'm really happy we managed to do it in 1 hour. That is the whole intent, to give you a quick and very insightful snapshot into what's happening. Please fill out the survey form as it pops up when you exit from this webinar. Thank you for joining us today. Stay safe, and we'll see you at the next Bitstamp Talks.